Hi guys, welcome to my channel and a happy new year to you. In today's video, we'll be looking at how to trade order blocks and which order blocks to avoid. Okay, first thing first, let's define what an order block is. For a bullish OB, this is the bearish candle before an aggressive move up. Okay, for example, this is what we mean here. Let's assume price was going this way, so that means the candle here, the last bearish candle before the move up, is the order block. Okay, and the bearish order block is simply the opposite, the last bullish candle before an aggressive move down. Is the bullish order block. Let's go to the chart and see the other blocks there. Now, if you look at this chart here, you can see, let's start from the top. Yeah. Now, for the bearish order block, the last bullish candle, okay, before an aggressive move down, is the order block. So this is the order block here. Price came in and then traded down. Now, this is a bullish order block. Yeah, bullish order block. The last bearish candle before the move up. Okay, and as you can see, as price came in, it destroyed the order block. I will tell you why in this video, so stay tuned. Let's also identify another one here. We have one here. This is a bullish order block. The last bearish candle before the move up, price came in, respected the order block, and then move. We also have this. If you are pointing out this, you are correct. The last bearish move before an aggressive move up. In this case, this order block is not yet what tested. So you can go to your chart and identify order blocks. Okay, they are a very powerful tool for smart money traders. Okay, like me, we use order blocks to enter trades. So that is the order block. Okay, now how do you trade them? The way you trade an order block is this: you wait. When you identify your order block, you wait for price to come in to the order block. Okay, then you take your position. You wait for price to come in into the order block. Okay, when price gets to the order block, you initiate your trade. Okay, that is the order block. And is also, you can also make an order block a point of interest. You can also make an order block and call it what, a point of interest, because you are interested in that area. Okay, that order block, you want to trade up that order block. Okay, now, should you be trading all the order blocks? That is the question I will ask you. Should you trade all the order blocks? No. And these are the order blocks you will need to avoid. These are the order blocks OB to avoid. I just categorize them into two. Okay, into two. The first one OBs at liquidity pool. Okay, the first one are OB at liquidity pool. What does it mean? When you identify an order block around liquidity pool, this is what I mean by liquidity pool. Like if we go back to this example here, this OB that was not respected. You can see below it like a trend line liquidity. Okay, trend line liquidity. In most cases, when I see other blocks around liquidity pool, because below these are money, tons of what money, below them I'll have to wait and see confirmation here. I have to wait for confirmation in this area to confirm if this other block will move up, will be respected or not. Okay, because it is identified around liquidity pool, so this other block should be avoided. Okay, those other blocks should be avoided. Also on your way up here, you can see here, these are pools of what liquidity. If you are to trade this other block, for example, if you are to trade these other blocks, yeah, the last bullish, you can see that it was not respected because it is at the area of what liquidity pool. There are tons of what money in this area, a lot of money seated there. Money seated there. Okay. So whenever you see other blocks at liquidity pool, it's not only trend line, you can also see support and resistance. Okay, support and resistance area, those are liquidity pools. There are a lot of liquidity up here. Okay, so the market mostly goes in search of what? Liquidity. The market goes in search of liquidity. So what it does is that when you see an order block in this area, trade it with what? Caution, because above it lies what? Liquidity pool. So price is more likely to come in and smash this other block to grab that liquidity pool. Okay, so that is the first order block you need to avoid. You don't trade all other blocks. Like if you look at this now, you can see that there are no form of pools of liquidity below that much. So that's why price respected here and move. Okay, so that is that. Number two, you avoid OBs at wrong zone. Avoid OBs at wrong zones. What do I mean by wrong zones? I will explain shortly. Okay, if you went through my break of market structure video, you will come across when I introduce the range. Okay, like in this case, price move from here to here. These are new trading range. So you pick your Fibonacci from here to here. Okay, now this is what I mean. Let's go to a blank space. Let's go to a blank space. Let me delete this. Okay, we have let's assume we have a range play here. These are new range because it broke structure. Okay, this range broke structure. So, and let's assume you have tons of what other block along the way here. We have one here. We have another one here. Then we have another one probably here. Which other block are you to trade? Is it this? Is it this? Is it this? Another way for you to eliminate bad other block is to check the zone. Where is this other block trading? Okay, and the zone we are looking at is simply premium and discount zones. Premium and discount zones. I will explain what they mean. Premium and discount zone. Now, looking at this trading range from this low to this low, Remember, this is a break of structure. You want price to come in, trade into your order block before moving up. But which one are you going to trust that we hold? The first way to do that is to look at if the order block is in the premium or a discount zone. If you are looking to buy, buy at what? Premium. And buy at discount, sorry. Buy at discount. Buy at discount. And sell at premium. Now, by discount, it means the price is cheap. Are you not going to buy an item that's cheap? Yes. And when the item grows, for example, you bought a land for 1 naira or $1. Okay, I'm from Nigeria. So you bought a land for what? $1. And maybe in the future, the price of that land rise to what? $10. That is a premium. You are going to sell, but you are going to buy at the low price at $1. So when price crosses this 50% level, this 50% level is the equilibrium line. Okay, any OB that is below this, you can anticipate a buy from them. Now, any OB above that are in the premium, you look to sell. Okay, so in this case, I will eliminate this. I will eliminate this OB here. I will not trade this because it is above my equilibrium place. It's at the premium. It is at the wrong zone for buying. I will not buy anything above here. I will only look to buy anything below the 50% line. So, and the lower down the range the order block is, the more probability that order block has to what? To be respected. Okay, so let's look at the chart. Sorry for that. Let's look at the chart to see how to apply this. Take for example this range from here to here. Okay, from here to here, you can see that this move broke structure here. This move broke structure. Bullish BOS broke structure. Okay, broke structure. So we are going to use a Fibonacci tool from here to here. So any other block above this, as price was coming down, you can see that we have another block here. We have another block here, but it was not respected. Just because you could have avoided this, okay, you could have avoided, because you can see a down move before and a move up, but you could have avoided to take this trade because it is at the premium zone. It's a wrong zone for you to buy. You only buy when price gets below the 50%. So that is why this order block has a higher probability of what? Being respected. Okay, so this should be the order block you should be buying from, and not this one. Okay, so I don't want this video to be longer than usual. So how do you trade it? You wait after a break, you wait for price to come in here, and you then execute that trade at the week. Some people use the 50% level. Okay, you can either use 50% level here for your entry, then stop loss below, or you use the touch of the week. Some use the open. But the way I trade, I don't take the trade instantly. I wait for what? Confirmation in a lower time frame. When price comes in here, I will switch to the what? The lower time frame from 15 minutes down, and I will look for a pattern, this pattern here. Okay, when price comes in here, I will look for a bullish break of structure in what? In the lower time frame, to confirm that price is ready to what? To go higher. So when next price comes into my point of interest there, which will be another block, I will look what? To take that trade. So that is how to trade order block and to avoid fake OBs. All right, the next video is very important for you. Make sure you watch it. And if you are still here, remember to subscribe to this channel, like this video, hit the notification bell so that when I release new content, you'll be the first to know, to be notified. And also, if you have any thoughts concerning this video, or you are struggling with a particular topic and you want me to touch it, put that in the description, in the comment section below, and I'll be honored to make a video on that. All right, have a nice day.